Yo, what up? What up? What up? What's up, my mammals? Um, Give me 1 second. Let me hide these captions real quick. Can everybody hear me all right? Let me know in the chat if there's any issues. And I'll mute y'all real quick so you can't speak. Um, I appreciate all you guys tapping in with me tonight. I don't know if I'm a real big fan of these 1 day a week trainings in the Wealth Squad. It's been a little bit. I'm like at the bottom of the cycle, so it's like every month and a half for me before I come back and give you guys an actual like scheduled training. But um, I appreciate you guys taking time out on a Wednesday to listen to me yap about the market and all those things. And I appreciate the people who have sent DMs and just trying to get better and understand things. I've been trying to go through my 9,000 DMs and answer them from like 3 months ago. So I appreciate y'all. If you have any questions, put them in the chat and I'll try to get to them as quickly as I can through the meeting tonight or the training session tonight. And anyhow, y'all know the drill. Welcome anybody who just joined the Wealth Squad and you're new and you don't know about the community or it's overwhelming. Hopefully tonight will clear up some of those things for you and just understanding stocks, the way they move, the market, all those good things too. Um, that being said, let me share my screen with y'all. All right. Everybody can see. Everybody can see everything. So I think first and foremost, what I what I really wanted to say that's funny. TR, my kids yap, you drop gold. That's funny. My oldest boy, Brandon and Nathan, when I just ramble on about things, they tell me I'm yapping. I guess that's what all the cool kids say these days that we're yapping. So I appreciate you guys to come on here and listen to me yap. Um, let me. I forgot what I was going to do. So I'm going to attach. I'm going to try to. I got to hide some stuff first. Hide this. I don't be knowing which one of these buttons do what. Okay, I messed with the resolution. I messed up. Cancel that. Sorry, I pressed the wrong button. I'm going to share this money flow chart with you guys real quick. I've done it a couple of times already, and I just wanted to do this again. So, and I should probably open it up on my screen too, I guess. But with the money flow itself, it's all, when it comes to charting, when it comes to getting in and out of your trades and things like that, the money flow is what I follow. I don't follow all the strat and I don't look at all like the bear flags and the pennants and all those things. It's good to know them, sure. But for me, this is the only pattern that I worry about. It's the only pattern that I care about. It's the only pattern that I follow. Um, Shout out to Gerald Peters, Full Auto 11, for the conception of that and just passing it along and being everybody's father and guru of the money flow. And it's applicable to stocks, it's applicable to options, it's applicable to life. So, um, with the money flow, everything sort of consolidating in that stage one phase, the accumulation phase, which those stage ones are stage threes, right? It's that sideways movement of everything. And in stocks, it's really wonderful. Why? Because you can just load up and load the boat, right? And enhance your position or average down, whatever it is, right? The stage one and stage three for you are solid. And then you have your stage twos to the upside, um, for the breakouts. And then those going back into those stage threes, the sideways consolidation. And then from there, they either go one of two ways. They're either going to go to a stage four, or they're going to go to a stage two and do the whole cycle all over again, right? So in following that, I don't know if you guys can see my screen, but if you pull that up, what I sent you guys in the chat, I'm just looking at it on my bigger screen if you can't see mine on my desktop. But when it goes into that stage three, the distribution phase of everything, right? That's where you sell it. That's where you sell. That's where you trim your positions. That doesn't mean that you sell off your entire position, but it means that, you know, you put some profits in your pocket, right? And then at the first point of where that goes to the downside or where that goes to the upside is when you know, in the same way, if you look down in between the stage two and the stage one, where it shows the markout breakup and the entry point, you know, if it were to go back to a stage two from a stage three, to the, you know, meaning continuing upwards from a stage three and goes back into that stage two phase again, you enter it on that momentum upwards, right? You scale in on the stage three, right? Doesn't necessarily mean you go heavy, you go light, you kind of nibble at it. And then once it hits the momentum, that's when you go in a little bit heavier in the confirmation of the direction, right? Because yes, it's a confirmation of the direction sideways on a stage three and a stage one, but um, it's not really going anywhere else. You know, you don't know if it's going up, you don't know if it's going down. And let's just say you throw your whole life savings at it at a stage one or a stage three, right? And then what happens? It breaks to the downside and goes to a stage four, and you lose all your life savings, right? So you want to have that confirmation of direction. And usually that comes after the second or third candle, which I'll show you guys in some of the charts. Um, but then, you know, going down to that stage four decline and just waiting, right? You know, a lot of us, we panic when things are tanking, and we're like, do I go in? What do I do? Do I add more to my position? It's dangerous in the stock market to just continue adding a position to a you know, uh, butter on a hot knife, if you will, right? Where it's just going to continue to go to the downside. So again, wait until it gets to the bottom of that stage four and it turns sideways again for that stage one, the accumulation phase again, you know, 3 or 4 candles in, which is also equal to like 3 or 4 days, right? Of sort of a confirmation of a sideways movement. Then you can add to your position to average down. You can add more shares, whatever you want to do. But that's the basis of the money flow. And a lot of what the money flow is dealing with the support and resistance and understanding those things. Look, there's a lot of strategies that work. The strat, um, what is it? The ICT, IPT, whatever, every ICT that everyone is using. Um, I don't use any of that stuff. That doesn't mean that it doesn't work. That doesn't mean that it's not effective. That doesn't mean that um, you're not going to be a good trader. You're not going to be a successful trader if you use those things. It really just comes with understanding and simplifying your process. But it's hard to go into the strat. It's hard to go into ICT. It's hard to go into the advanced patterns or shapes if you don't understand the basics, right? It's just like in sports too. You have to understand the basic fundamentals to understand the overall game itself. And a lot of the times it takes two when you're in the market is taking a macro approach of things, meaning to zoom out, look at the bigger picture. Where's it going? What is it doing? Um, you know, we talk about all this recession talk. People have been talking about the recession for 2 years, and nothing has happened, right? And it's just people looking at the S&P 500 on a very fractal, small scale, rather than zooming out and looking 25 years over its growth, and seeing that it's nothing but a small ripple in the stream. So if you're really struggling with the concepts and the principles and having them stick, keep going over the fundamentals of support, and resistance, and looking at those key levels, right? Um, one of the things for me when I'm charting SMC and ICT, yep. Higgins says, pull up the Celsius chart, let the people know where you put them on at. I plan to. So with the charting in general, whenever you're looking at trades, if you don't have anything to compare it to, let's just for instance, I'll cover these trades that I'm in right now, these options trades that I'm getting smacked on. I'm getting smacked on all of them. I just entered ARRY today. And again, for this, it was just a matter of crunching the data for me. Is that if you look at this chart and you go and look at the money flow chart, you see four consecutive money flow setups that are all forming on this thing. It's really easy to see when you crunch the data, right? But if you stretch it out and you're looking at it in this kind of way, it makes it a little bit more difficult. So usually before I ever get into the trades, I'll crunch the data and look and see, well, what are the patterns? What are the shapes? What are the consistencies? What is it doing? If you just notice, I mean, I'm just looking at this for 30 seconds and seeing the same pattern for this earnings, the same pattern for this earnings, and almost the same pattern right here again, almost the same pattern again right here, right? So you've got one set of money flow, you've got two, you've got three, 4, 5, 6. So it's basically on the 7th cycle of the money flow since November of 2022. This trade that I got into today for options, which I also think could be a solid swing trade for shares if you have patience because of where the 20-day sits, where the 200 sits. The 200 sits around $19 on stock charts. I don't have the 200-day pulled up on here, but it's right around like 18.99 or like 19.27, I think is the 200-day on that. So for this, that's a $6 per, almost a $6 per share swing trade. That's solid in terms of returns. And in the options world, yes, this will move a little bit slower because it moves around 50 cents, 57 cents, I think it is, on a daily basis. But if you tap all of that into your average true range, which is your basic daily price movement, you've got your daily average range, right? Which is how many cents or dollars does this move per day, right? And your ATR becomes over the course of 14 days, it's the average of whatever that dollar movement was. So in this case for ARRY, the ATR is 57 cents because over the course of 14 days, on average, that's what it moved to the upside or to the downside. Now that there were outliers in that, right, on these giant candlesticks, but it's understanding price action movement and what it could do. Now, in terms of choosing targets for me, I go as far back in time that I have to go in order to figure out what my targets are for the trades. And a lot of the times, and I'm going to just zoom in here a little bit so you can just see it a little bit closer. I think, oh, trading view is a little bit different. Go this way. Yeah. So this green line here at 14.17, I'm going back in time as far as I need to go to say, where was this share price before? What level was it? What support and resistance did it break? What did it struggle with? Where did it bounce? And if it's big candles like this, the peaks of these candles become resistance. But I'm also going to look at in between those of figuring out what are the intermediate targets of those, if that all makes sense. And it's really like, look, if you have to go back 5 years, there were a couple of stocks that I was noticing. I was looking at them and I was setting levels on them from 3 years ago because those levels 3 years ago are going to set the same levels for the present day time too. So it's really going back in time. If you struggle with the support and resistance side of it, of how do I do that? How do I read the candlesticks? Um, how do I understand the open and the close of the candles? I have a training in the Wealth Squad University that's understanding the candlesticks, where I take you guys step by step through all of those and explain in detail how they work, how they move. So go and watch that. I think it's an hour and a half long, something like that. But understanding that, and then you know that when you're getting into options, for instance, um, it gives you a better idea of what your targets are, and the calls or the puts that you're going to get into, the contracts you're going to choose, so on and so forth. Like, just for instance, for this, right? I can realistically run this up to 17. That would be a top target. Now, do I think that's realistic by February 16th, which is my options expiration date on that? I don't really know. If 57 cents, I would say probably conservatively, it could hit three targets up to 1583. The 1654, this giant filled candle right here, is a bit of a stretch because of how much this gets pushed down elsewhere, right? It gets pushed down here at the 1475. And then when it reaches this next one at the 1583, that's also where it gets pushed down. So I suspect that it's going to have the same sort of thing happen to it. And you see that this was over the course of 3 or 4 days. This was the course of 2 days. So I suspect that probably is going to happen with this one if it gets to that point, right? And so if I only have 8 days left on my contract, then I'm taking basically 5 of those days away for consolidation, which means I really only have 3 days or 4 days to really kind of see where this moves, or for me to sort of get out of the trade without getting smacked, before it consolidates in whatever direction. If it goes up to those targets and it consolidates there, it might not, or it might get to those targets and it might just blast right through them. But I I always want to assume that it's, or at least err on the side of like, look, every trade that I get into is going to be a winner. But if it's not, um, that's okay. You just move on to the next one. I think a lot of it is really just practicing good habits in relationship to the money flow. And look, I've held on to trades for a long time. Sometimes I hold the bag too long where I should get out. I miss my entries, I miss my exits. I'm just like you guys. I'm no different. The last month and a half, I've been getting smacked on so many trades. Um, and part of it for me too is sometimes you just need more time. There were several trades that I got out of, save for one of them, Starbucks for another one. Starbucks went crazy a couple weeks ago. I got out of that trade early because I was getting smacked like 70%, 75%. But had I stayed in Starbucks, that trade would have been really profitable because it hit all of my targets in over the course of a day and into power hour before it got smacked the next day. So a lot of the times it's really about patience and trusting the work that you're doing, trusting the levels that you're doing, and trying to find the support and resistance that runs through multiple candles that are going to be able to support your theories. And look, I don't want to say that I'm a wizard, but I'm kind of a wizard. But wizards are wrong too sometimes. And you guys know just as well as I do, who have lost on the trades that I've gotten into. Um, I've been wrong plenty of times, but I think I've been right more than I've been wrong. Um, so, just for instance, with this trade, if I'm choosing option contracts, or let's just say I'm going to swing trade this into shares, and maybe I'm not comfortable day trading the options, or maybe I'm not comfortable hitting the February contract or the March contract, and maybe I want to look at leaps. And when I say leaps, those option contracts are a year out. Anything that's 12 months or greater is a leap, in the options world. And a lot of the times when you're choosing strike prices and expiration dates for options, it's not so much about hitting your targets. It's more so about your budget, right? Because if, let's just say you get into a $15 call that's closer in the money, meaning it's closer to the share price, um, as opposed to, say, getting a $20 strike price in this swing trade for February or March, right? It's going to cost you less money. It's going to be further out of the money. It's going to be hella risky because, one, it doesn't move fast enough, but the open interest and the volume on the February contracts are, I think at the time were around 5,000, something like that. There's a significant amount. So I'm going to play it. I'm going to play it a lot safer on slower moving things. Some of the biotechs, oil and energy is really slow. Communications is really slow. Those kind of trades, I play closer to in the money. And I don't go as far out necessarily all the time because those contracts are usually astronomical and there's not a whole lot of activity on them. But if you're looking at, say, something like Tesla or Amazon or Google or Celsius or, um, NVIDIA or microcomputers, whatever it is, right? And you want to go further out with not being able to look at the charts all the time to kind of set it and forget it, then I would look into leaps for those. And that's, you're probably going to pay several $100s or thousands of dollars for a leap contract because of how expensive they are. But they're expensive because there's not a whole lot of risk involved with them. So it's really about choosing what's suitable for you. Sometimes the in between even numbers ends up running better than the odd numbers and vice versa. It just kind of all depends that you have to kind of look at where the flow of money is on all of these contracts. But generally speaking, every trade that I get into with options, I'm always under the assumption that I'm going to swing it, meaning I'm going to hold it for several days. I'm not always going to day trade everything. Day trading is a luxury, right? If it happens, great. If it doesn't, then you just know you're getting into a good contract, and that's part of it, right? I see a lot of people day trading shitty contracts, meaning that there's a lot of implied volatility, then theta rips them apart, and they end up getting smacked on their trades because they're under the assumption they're going to get into the trade, they're going to day trade it, and a lot of the times, most of the trades that I've ever been successful on have all taken anywhere between 8 to 17 days, somewhere along those lines. Very rarely is it all like same day or 2 to 3 days. It just kind of all depends. But I think the bulk majority of all of the most lucrative trades I've been in have taken like a week and a half. So that being said, I'm looking at contracts that are at least a week and a half, 2 weeks out, so that I have the option to be able to swing them further without getting smacked in my face. If they go against me for whatever reason. And there's so many factors, right? Just because a stock tanks doesn't mean it's a shitty company, doesn't mean it's a shitty contract to be in. There's all these variables in the market that come into play. It's just like with Celsius. I firmly believe in this company. I have for years. So all the little pullbacks, getting smacked, and the contracts did get smacked. The February, the March contracts got smacked. Even the January leap got smacked. But the long-term growth of it, I'm not sweating any of it because I know where it's going to go. I know where it's going to return to. And I think part of the thing with your trades that you have to create a habit for yourself is understand the company that you're trading, right? You don't have to know every in and out of the company, but the more you trade it, the more you're going to learn. So it's really just about repetition and testing your theories. And just like I said earlier in my message in the current option ideas, is that don't doubt your confidence. You've done the work. You have an incredible community around you. Don't doubt your confidence for what you're learning. Don't doubt your confidence for what you're seeing. Because when you don't have a mentor, when you don't have a teacher, your intuition is your greatest guide. And I see a lot of people who just kind of stuff that intuition, or they're trading from desperation. I think I've only traded from desperation. I mean, I can count it on one hand. the times I was desperately trading. And all of the times that I was desperately trading, I was getting smacked on every single one of my trades. Why? Because you're not focused. You're focused on, I have to earn this money. I have to earn this money. I don't know what's going to happen. And you tense up and you tighten up and you don't make sound decisions based on that. It's about being calm. It's about being relaxed and poised. Some of the most dangerous people I've ever met in my life in terms of the military, the Navy SEALs, um, are honestly the calmest, scariest people under high pressure situations. Those are the people you don't want to mess with. There's that saying, don't mess. The people who are the quietest are the people you don't mess with. And it's really true. Right. And I think a lot of that is it comes with that confidence, that supreme confidence that you've practiced so much and you've done the repetition, you've done the work, that it becomes habitual for you to see what you see in an instant. Like for me as a trader, I can look at a stock chart in 30 seconds and know if I'm going to get into it or not. I know if it's an opportunity or not, probably in 10 seconds, 15 seconds. It's the same thing with like walking into the gym as an athlete or walking onto a football field or a soccer field. People have a certain swagger about them, right? That you can tell by the way they talk, the way they move, who are the athletes, who are the ones who don't really say anything but would light you up in an instant that they got the ball in their hands. It's the same with whatever your craft is in the real world. Think about that. If somebody walked into your office doing what you do, you would know their level of intelligence, their level of confidence, their level of perception, anticipation, how committed they were. You can tell all of those things instantaneously. And so I attribute all that stuff to the stock charts and how I look at them through the repetition and the patterns. It becomes instantaneous for me. And it's really just about your work ethic and not going on to the next thing before you finish the previous thing, right? You can't go on to the advanced patterns if you don't even know support and resistance. You can't go on to options if you don't even know how price action movement works. Because if you do, you'll get smacked in options because a big part of options is the price action movement. Trading the share price and options are not the same thing. They're totally separate entities. They're totally different art forms. It takes a whole different level of focus and I would say commitment and consistency to be able to trade options and to trade shares. It's two totally different things, right? Obviously, you're trading shares, the share price is hand in hand. Options, totally different. There's just so many other factors that come into play that you can't control. And yes, you can't really control what some of those are with the options world, but for the most part, it becomes about the consistency and the repetition. Does that all make sense so far? Does everybody follow me? I'm going to start going into some more charts and things like that, but I just want to run through these questions real quick and or just kind of breeze through these real quick to kind of see what we got in here for y'all. Mel says, do you only use TradingView to enter trades? I don't ever use TradingView to enter my, well, yes, I do. I use TradingView to enter my trades in the sense of I trade it in real time. I get my levels, but I use the platform I trade on is Charles Schwab. I have a Robinhood account. I have a Webull account. I barely use those. I really use Robinhood to like look at the options chains, to do really quick research. That's what I use Robinhood for. Sometimes I'll get into trades in both of those platforms, but very rarely. Everything is always through Charles Schwab. But I use TradingView to map out my levels, specific levels, and then I use stock charts to like look at the bigger picture because I don't think TradingView is as clean as what stock charts is. Do you stay away from companies and charts and that don't have many years of historical data, like companies that just IPO in the past year, or crypto with only a few years since their TGE? Yes, I don't recommend. It all depends, right? If you're talking about investing, absolutely not. I give them time to grow, unless it's like, I mean, I can't think of the last IPO that I got into that was like a long-term hold that I knew was going to be great. I got smacked on a lot of IPOs. So I would give it room. I would give it room to breathe and to grow, to be able to measure it against something. Because a lot of the times, the way the IPOs work, you have to understand IPOs are not for retail investors. IPOs are for institutions and hedge funds, right? That's why the price goes so high. They run the price all the way to the ceiling, and then they pull the rug, and then they smack all the retail investors, and then they go and scoop everything back up and then run their money back up even higher. So that's the basis of IPOs. It's not for retail investors. But everybody gets the FOMO that they're going to chase it. They're going to miss out. Look, I'm telling you this, there's over 7,000 stocks in the stock market. There is a banger 1,000, 2,000, 3,000% trade every single day in the market. The secret is you got to find it, right? You can't find it if you don't do the work. You can't find it if you don't know what you're looking at. You can't find it if you can't read data, right? So it becomes a part of your work ethic and your repetition and the consistency at which you do it. But the IPOs, sure, you can make a lot of money from them. You can chase them for a little bit, but I wouldn't ever play heavy in IPOs. I talked about that a little bit, I think, with Father Gerald on one of my last trainings with IPOs, when one of the stocks we were looking at. But and kind of along the same lines as this, as the IPOs, are some of these other trades that are running to the moon, like the microcomputers, right? How it's going to the moon, right? But I want people to be careful in what they're doing, because the stocks that run that hard and that fast in a short period of time, when they fall, people lose their entire life savings because they chased it and they got greedy. Don't be greedy in the stock market. You don't have to be. Be greedy with your shares. Be greedy with the things that you're holding long term, right? But options, why are you getting married to something that you know a divorce is coming? Like you got the expiration date of your marriage to that option contract. You know when your wife or your husband is going to say, "Bitch, I don't want you anymore," and your contracts are going to end. So don't marry yourself to them. Don't be sentimental about it. Don't be romantic about it, because they're going to end. There's an end date. Whereas shares, you can hold those things for 10 years, 15, 20 years if you want. So that's where I look at that in terms of what I get into and what I don't. Do I manually plot my support resistance or use an indicator? No, everything that I do, support and resistance, is all manually. It's all manual for me. Just like on my chart, I use the 20-day and the EMA5. I can look at a stock though now. I don't need those on there. A lot of the times that I have them on there, it's for you guys. It's for you guys, like when I post the charts, so you can also see the price movement of things I'm looking for it to cross. But I do everything manually. Does the money flow you're looking for always or typically correlate to earnings calls? Yeah, I agree with, I don't even know how to say it, Abhishek. Not necessarily. It does sometimes, but that's when you have to go back in time, right? Let's just look at another chart real quick. I'll just look at Apple. And I'll look at some other ones too. But it's really like, even if you crunch the data on this, right, for the money flow, is that you see where this was on the money flow. Now that this went sideways that other day, well, I guess it closed here. So yes, so my anticipation would be that this would then that this would continue to the downside on this one. But this could also be deceiving that, okay, this is consolidating, it's back in the stage one, and then realizing the levels, right? If I'm looking at this level here, let me just zoom in so it's easier to see, that if you see where Apple closed at on its earnings date, right? Or I guess, hold on one second. Let me just back up for a second. Okay, so Apple closed at the bottom here the day before earnings, right? And so what I'm doing at this point, going into earnings, is that I'm plotting the base of this, right? And see, and it's not exact. I'm going to try to make this exact as possible. and it helps sometimes to make it as exact as possible. Okay, so here's the thing. Now you go back and let's just say that that's the share price, right? This is where it closed on Thursday last week, Thursday of last week. It's at the base of this price. So the question I'm asking myself is, what's the next level? What happens if it breaks this level? Where does it go? Well, you can already see this giant candle here. You can already see this one. You can already see this one. You can see this one over here, right? So I'm plotting based on that, at least my next points, at least from this candle, the base of that. But then I'm coming all the way over here because I don't like all of this to the downside. Because if it breaks this, where does it go next? It goes here. And if you plot that out, it goes exactly there, right? It went exactly there right before it got pushed up. So you're past here. When you see that right before earnings, I'm plotting this out before the next day. And then in terms of like, if I'm getting into options and saying, okay, well, this is consolidating, but if it breaks this level here, let's say, so it opened here, closed at the bottom of this, maybe I stayed in it more day, but then realizing, okay, well, it opens here, opens above these previous 2 days, which you could get deceived into these calls of getting into calls right here. I wouldn't get into calls until it passed this, right? Because you can see it. But if it gets pushed down, I already have this level that, okay, if it breaks this level, where does it go? This is where I know to get out because this ride all the way down is heavy, right? You're going from 184 to 178, 179 in accordance to the money. Because the money flow here, I would expect that this was consolidate. And I wouldn't anticipate that Apple was going to break here. I would actually anticipate that Apple was going to go to the upside. And like I said, like it just works against you times. But if you plot your things ahead of time for the earnings or whatever it is, or the day before earnings, it makes a lot of sense. And then also too, it's really good to go back after earnings and kind of see what you notice. You've got this one the day after earnings, it tanked. Day after earnings, it went to the upside. Day after earnings, it went to the downside. Day after earnings, just consolidated, right? So I'm also looking at what did the last 4, 5, 6 earnings do? What's that ratio? What is that like? Was there growth in between that? But you can see the areas of the money flow here in between earnings and the next period of time. You can sort of anticipate certain patterns, right? Look, you've got this pattern right here is almost the same pattern is this pattern. This pattern and this pattern are almost the same as this pattern. Right. And it's I'm guessing. So it takes going back in time to look and see the consistencies in the chart and when do they happen, right? If we look here, this is from basically January All right, sorry. Can you hear me? My bad. Sauce. Giving them the sauce, they had to cut us off. I don't know the I don't know the last thing that you guys heard on here, but a lot of it is looking at the consistent. The previous one, it cuts off all the questions, so I'd have to go back. I'll have to go back into them and answer them individually in the Discord, unfortunately. So I'll download that transcript and try to answer everybody's questions. But a lot of the earnings of everything is looking at the consistencies and the patterns and trying to follow the trends in anticipation of what it might do next. Um, Obviously, like Celsius is one of the ones for me that has been a constant um, cash flow workhorse for me of being in Celsius when it was $34, well before the stock split. I think in December or January of 2020, Celsius is the money flow of following that, right? You got the whole period over here of a stage one, boom, goes to a stage two, comes over to a stage two, boom, stage three, trim, you add to your, goes sideways, you add more, falls again, and then it consolidates for 4 or 5 months, right? So it's really just understanding the macro level of everything, macro, the bigger picture of these trades. American Airlines, of what I'm getting smacked in if it loads. So if you watch your P&L and gains, hold on, I just want to hide these captions. I don't know how to hide them like I did last time. Okay, it's fine, whatever. No, I don't always watch the P&L while I'm in the options. I mean, I do in terms of just understanding what I'm up, yes, but I'm also like if it's something that's consistent with um, strong price movement, then I'm focused on the target and the support and resistance. And if I know it's like if I got time on the contract, if it's not risky, and I can afford to not look at the charts, and I feel like, and I'm very confident that it's going to hit those targets, I'll just manually set it. I'll just manually set my targets, and I do that with the options profit calculator. Let's see. Hold on. A lot of the times I'll do that with the options profit calculator to see. Now, this is just a guide, right? You go to the long call, you plug in all your information, and then it gives you an outline of, where does it got to be for it to be profitable, to be a profitable trade of, do I stay in it longer? Do I not? And again, I gave a walkthrough of the options profit calculator at 1.2. That's in the Wealth Squad training that you can look at. That'll further explain that in detail. But looking at that, Delta Airlines, I think I'm getting smacked like, I think I'm down almost 60% on Delta Airlines at this point. Even for Delta Airlines here, and I think when I entered the trade, it was here, right around in this level. I'm just trying to crunch this at a level to where you guys can see it a little bit better and understand it. We got into the Delta Airlines trade around in here, which I thought for sure it was going to hit these targets up here. And it's obviously went to the downside, but now it's sort of consolidating again, sort of made this little hook. It's back on its way up. And even though the contract expiration is next week, it's still very capable of hitting those targets because the movement per day is right around 23 cents. And now there's obviously outliers with that, but even at minimum, I would be okay with even if Delta Airlines bounced back and hit the 4102 as opposed to the 4198. Now, I hope it goes to the 4198, but if it doesn't, by the time I get to the 4102, it should close to profitable or sort of break even, which I'm okay with that. It just kind of all depends on what's happening. But the way that this is moving in terms of the money flow, I had no reason to get out of this trade, right? Because I entered at this level here, and this is where this fell really hard. But it didn't get to what I was looking for it to break was there. I was looking for this to break right here at this level, and it's sort of did, but then it got pushed right back up. So for me, that says it's not going lower than where this loss was. And I think this loss was right. I don't know. This was like 70% or something. It was pretty far down of where I was getting smack bottom of this. But this was my baseline. It's not necessarily the stop loss. It's just for me of saying, okay, this is the mental note of where do I need to get out of this trade before shit really hits the fan. It was already getting smacked much more than what I would have liked here. But when I started to see a rally here, that to me was saying this is where it wants to be. It wants to be in this area. It wants to be up in this area and make that runs. And then also, even though I'm in Delta Airlines, I'm looking at American Airlines. I'm looking at Hawaiian. I'm looking at United. I'm looking at Frontier. I'm looking at Spirit. I'm looking at all of the airlines to see what charts are similar. What are they doing? How are they moving? How are they rallying in in uh, in in conjunction with Delta Airlines? How are they affiliated, or are they affiliated? They might not be, but a lot of the times airlines, for some reason, sort of move similar. You can look at it through this chart. While that's loading, I'll bounce back here. P&L. Gola says keep mainlining Celsius until at least 70 to 100. Look, in all honesty, it's a bold prediction. I told you guys this in one of my previous notes. I honestly think that Celsius is going to be anywhere between 100 to 109 by the end of the year. Will it? We're going to see. But if you look at their financials, you look at their growth rate, you look at the pace that they're growing, it's on pace to hit between 103 and 109 this year. So we'll see. We can circle back. Somebody take a screenshot. The MEL stock split. Somebody's doing it. Would I trade the stock splits? Yeah, you could trade the stock splits. The thing with the stock splits is most of the time those things get high volatility. Why? Because when they split, people essentially get more shares, right? And so it gives them a bigger allocation in their current shares, and then it puts the share price lower so that more investors can get into it as a means for the company to raise more money for whatever it is they want to do, research and development, whatever that is. There's all kinds of different reasons of why they get into why they do the stock splits, but generally the stock splits are for raising capital. You're adding on stage 1 and 2 and taking some off stage 4 on your long-term buy and hold. Are you buying and selling the same amount of shares? If you're averaging down on your trades of where you're at, whatever amount of shares that you've bought, let's just say you own 1,000 shares of some, right? And you've got a high average. And now let's just say it's down 50%. And now you want to average down. For your average to move significantly, you need to buy at least minimum the same amount of shares that you bought the first time for it to really have an impact. I would almost say to double it or triple it if you can. If you can do that, you'll chop down all of your averages significantly, but you'll have to always do it based on the number of shares that you bought. And a lot of the times, if I'm trimming a position, I might just trim a third or a fourth or, maybe 3/4 of it. It just kind of all depends on how much patience do I have? What are my targets? And do I like my money tied up in this asset anymore? Can I reallocate it to something else? I will just say this in my own investments and in my own personal things that I'm investing in, like I've poured a lot more money into Celsius than anything. Celsius is my largest position. And I cleared out my IRAs. It's all it is. Why trade VIX? Why trade VU, VTI, SPY? Why trade any of those when I can trade something that's at a 47,000% in 10 years? Just think about that 10 years from now. Celsius has one of the lowest market caps, and it's the strongest stock in the stock market. Over Amazon, over Tesla, over all of them. So it's about realizing what problems are. Look, what problems is Celsius solving? I don't know. In terms of caffeinating people and giving them energy, I guess, because we're all tired. We're tired of the bullshit of the government. So give us energy drinks and Celsius to keep us energized. Maybe. I don't know. But it's just recognizing growth. And for me, it's just kind of a no-brainer. As Bitcoin is to Chris, Celsius is to me. How do you apply your stop loss when swinging 2 weeks out? You mentioned when you're down, most of the time you go back in the profit because you have time. Do you use levels for stop or the percentage? I'm using levels. I don't care about the percentage. I don't care if my stop loss is at 55% or 45%. It's really about the levels, because even if it's at 45 or 50%, it doesn't necessarily mean that it's going to break that level and it's fall through the cracks. If it's down 45, 50% and it hasn't broken your levels, that's just another opportunity for you to add to your position to fix your average. And I don't really like to average down on a lot of things. I would just much rather roll it into a different strike price. But on some instances, like the ones that I'm in now, American Airlines, Delta Airlines, Oxy, these, because I don't necessarily like the other strike prices, I would then just average it down on the momentum, just so I don't lose as much. Francis says, why not just track the airline ETF jets? I agree. If you want to track the airlines, go look at the airline ETFs. If you want to track oil and energy, go look at the oil and energy ETF. All the utilities, so real estate, banking, whatever it is, track those ETFs for seeing the consistencies of the market of how they move. And then you're able to reallocate your money differently and understand like the personality profiles of all of those. Mike, how do you feel about selling out of PayPal and VU to throw more into Bitcoin and Celsius? 100%. 100%. What's the return of PayPal? What's the return of VU? It doesn't even touch them. Just like Chris had said, is this opportunity better than Bitcoin? Is this opportunity better than Celsius? That's the same gauge that I use for the trades that I'm getting into. at least long term, like long term holds. Options, I don't necessarily use that same criteria, but for buy and holds, 100%. Like, I get it. The two tech, two index. The index funds are safer. It's not just in one single stock. Well, what if Celsius goes and it tanks, or they file bankruptcy, or it just you lose everything? Scoop it back up. If it tanks, great. I kind of want it to burn to 45 so I can get it lower. That's my own personal opinion. I would want Apple to burn. I would want Amazon to burn. I would want Tesla to burn. Um, which, by the way, I vouch for Chris's trade in Tesla too, because I saw Tesla also on my screeners, and like I said, I look for $5 to $6 gaps. And so with Tesla, this is a hardy gap with Tesla at $187. You come up here to the 200-day, that's 230. If you just have the patience to just wait, this already, just looking at this, you can see the money flow in all of this, of the stage that it's at. That it's right now, it's in a stage one. So y'all should just be loading up on Tesla if this is the swing trade you want to do. I think it's a good trade to get into, and especially where it's at in terms of the oversold territory. Salvador says, "What do you think about Pfizer?" I think I also saw your DM to me about Pfizer too. In terms of a long-term investment with Pfizer, I don't really like them because they're not really growing. They've got really high dividends, but they're not growing as a company really. There's not much fluctuation. There's not much difference. I would much rather, again, allocate my money into something that has a stronger growth than what Pfizer does. But in trading options, short term, I think Pfizer is really, really great to trade options with. Pfizer was my first six-figure options trade around the whole time of the pandemic and the vaccinations. Tier says, does buying or selling of shares or options contracts make share price move up or down? What are other things that make price change besides the news? Um, the selling of options and the buying of options does, in a way, move the share price, because that becomes the fluctuation of money, the exercising of shares. So it does have an effect on that, but it's not directly correlated to it, because you're not trading the share price with options. You're trading the premium cost of the contracts. So it's actually really separate. But when you're selling the contracts or when you're buying them, people see that influx of money saying, oh, somebody's dropping $500,000 on option calls. Well, then that means somebody probably knows something that's going to run up, or vice versa. Somebody put in $800,000 in puts. So chances are it's got some bad news coming. A report's going to come out. It's going to be a lawsuit. Something's going to tank it. But then also other times, sometimes it's like a bait and switch, right? You might get an influx of $500,000 on calls, and it does completely the opposite. So it just kind of all depends. But there's a lot of things that make the price change besides the news. It's the economy, it's the market capture, it's what their competitors are doing, it's what those stupid idiot nerds are saying, who are supposed to be the trusted experts. It's what Jim Cramer says, right? Whatever Jim Cramer does do the opposite, right? Those all those things all matter in terms of what happens next. Not always the case, but it does happen. Yeah, Salvador, I think like trading options on Pfizer is fine, but long term hold for me, I'm not like Pfizer doesn't interest me. Siobhan says, how do you check or know the amount of stock moves up or down daily? For example, you shared the areas moving 54 cents a day in either direction. So on your charts, even on stock charts, you can get what's, oh, I got to log in again. I see. I think. I'll look at Celsius just because it's up here. For the ATR, which is, well, this is the MACD. I did have the ATR on my chart, but you can go to indicators in TradingView, and then you can type in average true range right here. average true range, right? And so that's going to put it in your bottom column. It's a little bit different on TradingView here, right? Because you got to come to it. Whereas on stock charts, it just says it. So the average movement of this is 50, I guess 56 cents, right? But I think that's wrong. Yeah, it's 268. So I don't know what I just added. I think I added something different. Or the parameter is different. I think I have to look at the settings for this. I'm going to delete that. But you can go to stock charts. You can come down here to overlays, or indicators, and go to average true range. And obviously you don't have to have this at 14 days. You can do this at 7 days. A lot of people do 7 days too, right? And then it's just a shorter range. But I don't think 7 days is really accurate. Like, what can you really measure in a week? I want to give it a little bit of time. Some people do 21 days, they do 3 weeks. I think that you got to give things time to have a measurement, to have a more accurate representation of what it's doing, right? Because if a week's time, let's just say something runs up $8, and then the other 2 days, the other 6 days, it only goes up $1.50. But if you stretch that out over 14 days and it has, it goes up another $7, it goes up $12, it goes up $11, then you have much more to measure it against, as opposed to just a short-term thing. It's just like when I used to sell cars. Just sell cars, and every quarter you get your quotas. And it's always the time when people get fired because they don't hit their quotas, or new management comes in and they blow everybody out because they don't hit their quotas in 3 months' time. Like, what can you possibly measure in 3 months' time? Nothing. You need time. So it's just the same thing. I would keep this at 14 days, or even push it out to 21. And the other thing that I wanted to say, in terms of, I get asked a lot, are we still holding? Are we still holding? Should I get out of this trade? That goes back to the question that somebody asked me about percentages or levels. And that's what I really want you guys to pay attention to in your charts. Like, you don't have to have your charts drawn out right away. You don't have to have them all drawn out, tatted up, everything else. Like, sometimes it's just knowing, where's my entry point? Where's my first exit? Where's my first support below my entry point? If you just know sort of those 3 things first, you can go back once you're already in the trade and then start to draw things, then start to analyze it a little bit more, to where you're not just cramming everything and missing opportunities. A lot of people miss the opportunities because they try to cram. But you don't necessarily have to do that at all. So that's what I would say in terms of these trades. Now, I want to look at ADM real quick. The other trade that I just got into, that I'm getting smacked on, that Chris also entered. And generally speaking, right, most of the times I'm going to enter the trades when all of the time frame continuity is all green. I don't like to do it when it's like this. But if you look at where this is at, ADM, and you can't really tell, see if I can. I think I have to change this in my settings. I was going to see if I could take that off, but I can't at the moment to where you can see it. Oh yeah, you can. It's hard to see here with the earnings and the dividend date that's right here. But it's just sort of sitting on this base, right? It's the lowest point. It hasn't reached this level here of where this candle is. The 51.78 is probably, for me, where this ends up bouncing to the upside, but it held all of this level right here. And in terms of where this could go, now I would just, even if you look at this, you crunch this data, you can already see of where the money flow is. That yes, it got to this level, it went a little bit lower, but it didn't break this level. And so now, since it's sitting at this level right here from January, now it's starting to consolidate sideways. I suspect that with the dividend and the earnings, that it's going to start to make moves. Maybe that's later in the week. Maybe that's later into next week. The market is starting to shift on a bullish shift now, since this little pullback with the with the Fed talks and everything else about the interest rates, it's sort of rebounding from all of that stuff. And a lot of the times, it just, when there's a lot of talks happening, a lot of the times it just means you got to sit on your hands and you just got to watch, even if it's just the trades that you're in. Just watch them, see how they move. Um, doesn't necessarily mean you have to exit your trades. And as a means to preserve your capital, sometimes it's better to just stay in them and then adjust on the fly. But it's all just sort of case by case. There's a lot of things that influence the market, but it's, for me, it's following the money flow of how the market is moving and how whatever investment or trade I'm in is responding to the market itself. Or if it's not responding to the market itself, what is it responding to? What's it moving in accordance with? Um, and in this scenario, like with ADM, they were under investigation for their CFO. They put their CFO on basically leave, right? Which would affect, I thought, their earnings, that they would release it early. But from this point, management had already established that they're fixing those problems long before the lawsuit ever came, made it aware to the shareholders. So I think where this ends up like this is, I think ADM really is going to be a banger swing trade, shares and options. Now, like I said, I got into the February contracts on accident. I was really hoping to get into the March contracts. That's what I was meaning to press, but I just said, F it, I'll rock with the Februaries. It's a little risky. The Februaries are cutting it close, but I think the March ones, I think the March ADM contracts are a solid entry. And granted, those are probably down the same amount that I'm down to in mine, 40, 50% or whatever that is, which is fine. I'm not worried about it because of this candle here. It's going to retrace it. At some point, it'll retrace it. And at some point, it's going to fill this gap. It's going to fill this gap back to 68. Now, will it do it by February? Probably not. Do I think that by February 16th, that it could hit, say, the 59? Absolutely. But it all just kind of depends on the end of this week and, obviously what does next week look like. But Thursdays and Fridays are generally the best days to trade in the market because they're the most volatile. It's when the most volume happens most of the time. So I sit on the sidelines and I just watch. Try not to panic through the chaos. It's important to be calm and collected through all that stuff so that you're actually making sound, logical decisions as opposed to the emotional decisions of, oh shit, I'm losing all my money, da 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 da. But SPY is bullish, right? SPY finished, I don't know what they finished at today. I looked at it briefly. But if SPY is bullish, right? SPY's at 498, SPY's at all-time highs. So why on earth would ADM continue tanking to the downside? ADM is already starting to switch too, as you see that SPY was switching. So I also go in accordance with that and see how is ADM responding to the S&P 500 moving. That's how I assess that. So I'm still in it. I'm getting rocked, but it is what it is. If I end up losing on the trade, I'll make it up in the next one. My plan is not to lose money. My plan is not to lose any money for anybody, not even myself. But if it becomes a losing trade for whatever reason, or it doesn't move and it sort of flatlines before my expiration date, that was the risk I took with accidentally getting into that contract. I went heavier than what I wanted to out of accident, but it is what it is. It's fine. I'll just average down, I think. But I don't want to do it yet. I think it's still too early to do that. I want to see how it's going to play out. Abhishek, yeah, I mean, I think averaging. Look, I think at this level of where it's at the bottom is a good place to average down. If it didn't break this level, ADM, I think it's a good spot to be at because it's at the stage one, right? I generally like to get it right as it hits that entry point of the stage two, like that. When I say this is a bit of a wide gap here. Let me see if I can find another. I think I can find an example in Celsius. Yeah. So like even with even with Celsius, right? Here's a This is sort of an example. These run-ups are pretty heavy. This one's a little bit better. I guess here is like this candle breaks, this comes here, and then where this opens, this essentially becomes your entry point here. A lot of the times you can catch it on that second candle, but to be on the safe side, you catch it usually on the third of whenever it runs up, right? Or even right here, really, of where these candles are consolidating sideways. Now, just it's all about breaking previous highs and previous lows, right? So if you're mapping this out from this level here, you know that you want to get this entry point as it breaks above this. And where this breaks above it was here. Obviously, it opened. It looks like it opened here and it closes here. So the moment it enters here and breaks it, that's when you get into it. That's when you get into the calls. That's when you get into a heavier position. That's when you scale into the trade. Usually you can jump the gun and get it on the second candle, or most people get it when it's on the third candle. But in the Celsius's case, and this is what it goes back to understanding the personalities. If you go back and look at all of Celsius's runs, the run-ups usually happen on that second candle, and then it can, it'll run up on the third one, and then that fourth candle, sorry, the first candle here, the second candle, then the third candle usually consolidates. So getting in between on that second candle as it breaks is usually where you catch the run up on that, and that's the personality profile of how Celsius moves. It's the same with this one, right? Of where this breaks. It broke and then it went to the downside. It broke and it's obviously going to keep going here. I think it probably stops around 59 and consolidates again, probably goes a little sideways, and who knows, it might blast through it. But understanding the personality profiles, again, the same thing happened here, is that it broke the previous high, right? That's your entry point. Boom, runs up, and then what happens on that next candle? It went sideways. Same thing, right? Same thing here. Broke the previous high, there's your entry, runs up, consolidates. It's the same thing over and over again. It's the same cycle. You just have to notice the patterns. And a lot of the times you can't see it until you crunch the data and look at it on a visual level. Does that make sense? Yeah, Suggs, the class action lawsuit on ADM. Look, lawsuits happen all the time. Lawsuits happen all the time in the stock market. Most of them never amount to anything. Look, it's even when I was trading Blizzard, right, the gaming company, um, and they had the lawsuit. They had the lawsuit about the CEO, the people committing suicide, the sexual allegations, and one would think that it would tank on all of that news. No, it didn't. It skyrocketed. It skyrocketed on all that news. So, and skyrocketed on all those lawsuits. It doesn't matter. Don't pay a whole lot of attention to the lawsuits unless it's like Curry, if it's something really, really wild, then sure, take it into account, but don't let it be the end all be all of whether or not you get into a stock or not, because most of the time it's irrelevant. That's just how I feel. Yeah, just like Ola says, it's like seasonality and publicity. That's it. It's a bit if there's a stock that's irrelevant and something's coming, they're dropping a product, they're doing some new partnership, something else. It's just like the news and the media, right? Of the clickbait things that they post. And yes, obviously a lawsuit isn't clickbait necessarily, but you got to think about what the news is. The news is all about propaganda. The news is all about getting eyes. The news is all about getting attention, right? That's the purpose of the news, is attention. So don't let it sway you on necessarily all of the decisions you're making. Look at the technicals, look at the setups, look at the support and the resistance. The charts make the news, right? The charts are the news. That's what it really is. I would pay more attention to the charts than I do any publications that are out. Other than some of the things with Celsius and the things that I've been invested in, um, or just market research of like digging into other companies, I can't even tell you the last news article I read about a company because I don't really pay attention to it. I pay attention to the charts. I look at stock charts. I look at trends. I look at patterns. That's all the news that I need. If I see, like, just for instance, with Celsius, like if I see this large drop or I see this large drop here, then I'll go back to the news and say, oh, okay, well, on January 19th or January 18th and January 19th, Celsius fell down, whatever, right? Celsius fell from 59 all the way down to 51. Well, why? Why was that? Then I'll go back into the news of the market and see what was happening on that day. Was it a Fed talk? Was it, what was the issue? And that's not just with Celsius, that's just with any company. I'm looking for the major spikes in either direction of where I garner my attention. I don't pay attention to the news articles, but I will say, um, I'll just pull this up on Tesla. What I like about FinViz is everything is functional. Everything's here, pulls all the news resources, everything else. So I might scroll down. I might scroll down to this and just kind of read the headlines, right? If you look at it, what's the most important part about the articles? It's the headlines, right? Because it grabs the attention. So I do come through this and I do look at the headlines to see where it's being mentioned, how it's being mentioned, who's it being mentioned with, what are the dates, what are the times, what was Tesla doing during this time, what was Tesla doing that time, what was Amazon doing that time, what was Elon doing during that time, what was what's his face, the CEO of Amazon, whatever his name is. I had a brain fart, I forgot. Um, but I don't weigh all of the news to be an end all be all for me. I take it into account, I absorb it, but that's it. I move past it. I look at the charts. Um, yeah, so just like Gola says, like Apple reports that they're working on a folding device. Like that's huge news to Apple, right? It's innovation. Anytime that there's innovation, those are important news pieces to pay attention to. Because those generally will have a strong impact on the direct correlation to who it's affiliated with, and then also the partnerships that are in line with that, or who could be recipients of whatever it is they're doing. So those sort of things, when it comes to like innovation, research and development, partnerships, buyouts, allocations, or acquisitions, those news really matter. Buyback programs, same thing. Those really matter too. The stocks go crazy on the buyback programs. Um, anyhow, y'all, I appreciate you guys tapping in with me. Um, I hope that this answers questions for y'all of just how to understand the market better, how to understand the charts better. And if I missed any of your questions tonight, hit me up in the Discord in any of the channels. I say I prefer the channels because then it becomes a collective and it helps everybody else because maybe they had the same question as you. But if you want to DM me, that's also fine too. I'm just a little bit slower to respond to the DMs because I get a lot of them. But shoot me a message if I've missed any of your questions or if something still doesn't connect for you. And that's it, y'all. Let's get this money, man. Don't be greedy. Practice good habits. Look at the money flow. Go back into Wealth Squad and into the university and look at the trainings that I've done and lock in. You owe it to yourself. There's so much money in the market every day. It's okay to get smacked. I'm getting smacked too. But the beauty of it all is that you can get it all back into trading options. You can even get it back trading shares. Same thing. So do the work, put in the work and put in the focus for it. You owe it to yourself. I can't want it more for you. I'm happy to give you the resources. I'm happy to help lead you in the direction. I'm happy to clarify things for you. But at the end of the day, it comes down to the way you execute and the way that you handle your trades. Um, that's it, y'all. I'm just here to help y'all succeed, and I'm here to help myself succeed. And all of all of the advice that I give you, all of the gems that I give you guys, I try to follow them myself. Um, I fall to the wayside too sometimes. I go against some of those things. I revenge trade too sometimes. I can't say I desperate trade out of desperation, but there's times when my emotions get the best of me too. But it's okay. It's okay to sit on the sidelines in those scenarios and just close your laptop and go enjoy your day, right? And just come back tomorrow because the market's not going anywhere. It's been here since the beginning of time. It's not going anywhere. It's a clean slate every single day. It's a clean slate for new opportunities. So lock in, do the work. Let's get it. All right. Appreciate y'all. Have a good night.